Well, in the province of Ontario, the budget shortfall is expected to reach its highest level since the early days of the COVID-19 pandemic. As the effects of the trade war impact economic growth, the province's deficit projected to be $14.5 billion in the current fiscal year, $10 billion more than last year's forecast. The Ford government saying it does not anticipate a surplus situation until at least the 2027 or 2028 fiscal years. It will also set aside $5 billion to provide support to businesses facing significant disruptions from tariffs. For more, we're joined now by Ontario's Finance Minister, Peter Bethlenfalvy. Minister, thanks very much, as always, for being with us. Obviously, we knew in the face of tariff uncertainty that was going to raise a lot of fiscal questions. How is this where we landed?
Well, look, you just mentioned it, $10 billion bigger deficit than projected last year. But that's against a much bigger economy, a $1.2 trillion economy. So to put that in perspective, our path to balance is only delayed by 1 year. So instead of next year, it's in 2027. But we got to meet the moment, John. Tariffs are impacting economies around the world. The world economies are slowing down. And Ontario is not immune from those forces. But we got a plan and a vision to deal with both short-term relief, $30 billion of relief in the short term, and we have a vision for the future, which involves the Ring of Fire and critical minerals, involves our energy strengths, it involves our advanced manufacturing and technology strengths that we have in this province to build even a more prosperous and competitive economy, the best in the G7.
And how can you measure the potential success from that strategy? Obviously, as part of what you talked about yesterday, there was a lot of focus on investing in workers as well. But I think on a day-to-day basis right now, we're trying to even figure out what is our auto sector going to look like in just a few years, just based on all the recent developments. So how can you net out the spending that we will do to try to offset that uncertainty will work out?
Well, I believe in growing the economy, and that means giving the tools and the incentives for investment in this province and to our workers. So, for example, we introduced the Ontario Made Manufacturing Tax Investment Credit, which means that if you invest here in plants and equipment to do manufacturing in Ontario, you get a big tax break. It's like cutting taxes for corporations. So that's incenting capital to come here, to invest here, which means they build buildings and equipment, hire workers. I'm thinking about the nuclear industry, where we announced building 4 small modular reactors. That means about $21 billion of investment. We need good skilled trades and engineers and workers to build that plant. And that gives us long-term not only energy security, but an economic competitive advantage. So you got to think both in the short term and the long term. And I want to boost real GDP per capita, boost the revenue per worker, and make Ontario prosperous for everybody.
And then in terms of, the need in the short term to postpone this idea of balancing the books, you've laid out a few different scenarios on how you get back to a situation of surplus. But what are the determining factors, do you think, at the end of the day, realistically, on being able to get there with the fiscal hole that we're dealing with right now?
Well, I look at the things that we can control to allow us to exceed those numbers. And one example would be interprovincial trade barriers. We're taking a lead here in Canada, John, in Ontario, under the leadership of Premier Doug Ford, to get rid of all the restrictions that don't allow us to have free trade in Canada. So Ontario is opening up our market. We're leading the way. Other provinces are coming on board. That could unleash some $200 billion of trade. And I've always said Canada's best trading partner is Canada. So those are things that we can do right now. There's a commitment from Prime Minister Carney to do that by July 1st, to do it on their end in Ottawa. And we're leading the way here in Ontario.
Are you hopeful? I mean, it's great that we are finally talking about breaking down the barriers from province to province. I would say it has felt like there's been, I know you're talking about the initiatives you've made so far, but we're still in the talk phase of a lot of this. Like, with such a big threat from the U.S. right now, why can't provinces move even faster on removing those barriers?
Well, you're absolutely right. It feels like we've been talking about this forever. But, we tabled legislation. So we're going to pass that legislation. And I'm very optimistic that the Prime Minister and the federal government will join us. We've got Nova Scotia, New Brunswick already. Manitoba was in town this week to sign a deal. We got other provinces coming on board. So that train is leading the station. And you're absolutely right. People said this could never be done. It's going to get done. People, we've been talking about the Ring of Fire forever. We're going to get it done. We're going to get those critical minerals. But more, as importantly, we're going to also process and smelt and refine those minerals right here in Ontario through the $500 million processing fund that we put together. And because we have all the ingredients to drive an economic superpower here in Ontario.
For those who know your own career history, they'll know that you have spent time analyzing debt, provincial debt. I believe in the case of Ontario right now, there's going to be a need to borrow upwards of $60 billion to sort of deal with some of these funding realities. What's the appetite for our debt? Who are the people who would be buying some of that debt, in your opinion?
Investors around the world. We've had a terrific, robust access to capital markets. And in fact, through our measures of reducing the debt relative to our economy, reducing the interest costs relative to the revenue, some of the best metrics we've seen in a decade. We got 2 credit rating upgrades last year from S&P and DBRS. We're on positive watch from Moody's. We haven't seen that in decades. That means our borrowing costs are lower. And don't forget, our economy is growing faster than our debt. So our debt to GDP is actually lower and is under 40 and is going to continue to be under 40. So that, in the face of the uncertainty, the economic slowdown, is really put us in a very strong position to respond and lean into the economy and our workers.
Just a final question. People are reacting to some of the headlines we've seen out of Ottawa about the new Liberal government, according to the finance minister, not planning to table a budget this year. I suppose I would ask if you can put forward this fiscal plan for a province as big as Ontario, in light of the need to see what's happening with government spending. Do you think we should be seeing something more from Ottawa this year?
Well, look, I believe in transparency and tabling budgets, and I'm out every 90 days answering to you and those, I'm spending your money, taxpayer money, I'm accountable. They've chosen a different path, and they have their reasons. But I talked to the new finance minister yesterday, François-Philippe Champagne. We've got a great relationship. He wants to get things done. He wants to boost the economy. And I think so does the Prime Minister. They campaigned on that. I'm confident and optimistic they're going to follow through on a lot of things. I think we're rowing in the same direction. In terms of how they do the mechanics to get money out the door or regulations cut or one project, one approval, permitting, all things that they campaigned on, I'm very optimistic that they're going to get done irrespective of tabling a budget.
Okay. Peter Bethlenfalvy, thank you very much for your time. We appreciate it, as always.
Always a pleasure.
Ontario's Finance Minister Peter Bethlenfalvy. We were mentioning